We caught up with Lupin management in a very special interaction post their numbers. Let's cut across to that.
Ramesh, let me just start with you first. Q3 numbers are all about financials. Margins came in 19% versus estimates of about 17.5, 18. You have guided for it earlier that margins will improve, but what drove this expansion?
The top line EBITDA was 20.4%, but if you were to knock off one-time income, which is actually there in other operating income, it is about 18.6%. Also recognize it is actually come in the face of, in fact, a reduction on the MEIS front. That's so obviously because the government has withdrawn that. But overall, there has been growth all over. There has been growth in almost America. Of course, we had the ramp up of albuterol. There was also growth in newer products that we have brought in. Whilst of course it's been the worst flu season in several quarters, so to speak. India did well, and as did a host of other markets. API business, unfortunately, its flu season had not caught on in most parts. There was actually a degrowth, but otherwise sales has been pretty good. But apart from that, there has of course been tremendous work done on the cost containment front. As you know, we have been working on, in fact, gross margin increase, and we have been pretty successful there. If you look at, in fact, the other line, we did particularly well to contain manpower costs. It came down from the 22%, which it was in Q1, and second quarter was down to 685, and this quarter is just 707, including, in fact, the increments and the like. But more importantly, there was operating leverage clicking in. So all of this helped in contributing to a pretty healthy EBITDA margin. But this is in line with what we promised. When we took off at the beginning of the year, we spoke about the fact that we would work continuously on improving margins, and we did exactly that.
Right. Today we also have Vinita Gupta with us. She rarely, comes on TV. So Vinita, firstly, thanks for taking out time for us. Could you start by the US business and, just not talking about this quarter. So if I look at the last 1 year, you've done a complex launch of albuterol. You've gained market share in some of the other products. Somehow your R&D, pipeline seems to be, getting better, looking better. So can you just talk about the overall US business, how the company is moving from only a generic to also now complex generic and then maybe later even biosimilars?
Sure, Pankaj. So it's been an effort of many years. We've been investing in a pipeline for 5 years in these areas of inhalation, biosimilars, complex injectables, and you're starting to see the results now. Starting with inhalation, where you've seen the albuterol launch, and we'll definitely look forward to ramping it up in the next year and beyond. But beyond the rest of the pipeline on the inhalation front, we have a couple of products coming into the market next year, and then year after, we are hoping to launch our first DPI products, Puriva. So a couple of years of the inhalation build, and then we have a rich pipeline beyond it and inhalation. On the complex injectables and biosimilars front as well, our pipeline is making significant progress. I mean, we expect to file pegfilgrastim, our first biosimilar to the US this quarter, and could potentially be in the market mid of next year. So getting ready now to, with our commercialization plans to get that into the market. And then complex injectables, I was going to finish on the complex injectables. There's a real synergy between pegfilgrastim, the biosimilars, and complex injectables, given some of the GPOs are the same, and so the capabilities that we are building, we're going to leverage across our complex injectables as well as biosimilars. So we really feel good about executing on the pipeline and delivering, sustainable growth.
Right. Vinita, what do you make of, what's happening as far as the US FDA issues are concerned? And I'm not only particularly talking about Lupin. So last 1 year, no inspection. But at the same time, one would say that plants which are stuck are having a problem because you may be ready to clear it, but somehow the inspection is not possible. So how do you look at this, this particular US FDA era that we are going to, and when do you expect physical inspection to start?
So we know that this week, the physical inspection has started with one of our peer sites, and for a product that is mission critical. The FDA has found a way to get the inspection started, and we think we are hopeful that given the vaccine rollout this year, later half of this year, potentially physical inspections can start. In a broader way, not just for limited number of products. So we do think that maybe the later half of this year or early into next year, we should start seeing physical inspection.
Right. Nilesh, let me come to you now, and particularly about the India business. So first 2 quarters, one would say, there was a disruption with India business. Most of the sales that was only happening was COVID related. Have you seen things normalizing? Do you now predict that normalized growth for India market is possible?
So it's still not normalized, but it's a build. I think there was, significant disruption, especially in Q1, started to pick up from Q2. Now, from what we understand, close to 93% of doctors are back with clinics open. About 80% patient footfall into that. The anti-infectives GI segment still remain impacted. Part of it is just people being more cautious, people not stepping out as much as well. So we do see that it's still a build. We definitely see a pickup in Q3. Our growth was also 5.3% year on year. And in the top bigger areas, inhalation, CVS, diabetes, that's where we had solid double-digit growth. Next year, we see us getting back overall to that double-digit growth as India picks up.
Right. Nilesh, also just wanted to get a sense on the R&D rate. One would say that R&D rate was lower in this quarter, but how would you look at it? Should one only look at it on an annual or maybe 2-year basis? How much is the company spending?
So we're now guiding close to a 9%. So as you know, we used to be at 10%. So we're now guiding close to a 9% on the R&D spend. So we do see that optimization happening, and especially as revenues pick up, we should be able to stay within that number. It's still a very good number. It's still a number that lets us do a lot. Like Vinita shared, injectables, inhalation. There's pretty much every dosage form that you can think of that we work on. And as we deliver it, as we have with products like albuterol, you can see that it has a significant return on investment.
Right. Ramesh, let's talk about the margin levers. So last quarter, you told us that as the sales would pick up, company is taking cost-cutting initiatives or other cost-rationalizing initiatives in the last, 1 or 2 years, since the time has not been that great for overall pharma companies. The margin levers are high. So would you still say gross margin improvement is higher on the back of market share gains, as well as what Nilesh was talking about, the India business? As the sales would improve, gross margins would also tend to go higher?
Yes, I would agree that gross margins would continuously improve. So we are in fact working on a host of other initiatives. So you would recognize that we've been doing this for quite some time. So alternate vendor strategies, routes to synthesis, all of these are playing in. And as we actually go up on the products introduction front across various markets, albuterol ramps up. We'll have Foster coming up in UK. You'll also have Nemuscla ramping up in Europe. You would expect gross margins to certainly ramp up, and this will flow through into to other lines as well in terms of the overall EBITDA improvement.
Right. Vinita, let's talk about the opportunity that albuterol or ProAir gives you. How important step is it as far as Lupin goes for the US market, and where do you see more such complex launches coming in, where the company would get an edge in terms of market share or move up the value chain, as they call it in the stock markets?
So albuterol certainly is a major opportunity, and the reason being it's a fairly complex product to make from a development perspective, and that's why you see the limited number of competitors.
All right. Meanwhile, pharma definitely is the cynosure of all eyes. Even today, you have a lot of earnings coming out. Dr. Reddy's